In case you have not watched the chapter 1, please try as much as you can and watch it again. So welcome to chapter 2. So chapter 1, we actually talked about a whole lot of things. We talked about structure, talked about structure mapping, we talked about structure as a break of structure, as it were, structure identification, and we talked about valid and invalid pullbacks, which are very, very important for our learning. Okay, so today we're going to delve into the major aspect of trading this strategy, which we call the key levels. And the key levels are the basics. Once you understand the key level and you understand the first chapter which we did, then you are actually good to go. All you need to do is to put things together. So I can even use text to show you what to do and you'll be able to get it. All right, so this is why this session is very pivotal and very important. So let's dive right in. We have 3 major key levels, and it is important that you pay attention to the key levels that we have. We have the A-shaped key level, V-shaped key level, and the gap key level. Now, for me, I don't really like calling this a gap. I love calling it open close candles instead, because to actually see a real gap on the chart, we might need to use the futures chart. The future chart might be the only the futures chart. Ouch, what is this? Sorry, I was distracted there. The futures chart is actually the one of the best, is actually the real pricing. Okay, we won't talk about that today, so let's dive right in. So we have the A shape, V shape, and the gap, open and close candles, and these are the candles, these are the things we are going to be paying attention to subsequently. Is that okay? So I want you to take note that the A and V shape key levels are known as the classic SNR. SNR is support and resistance. So if you have this, you have this, you have this, you are good to go. But majorly, of course, we're going to learn when to use the A shape or when to use the V shape, and also when to use the open close candles. All right, so let's continue. This is very important and is going to help us to frame our setups later on. Okay, so this is the classic SNR, and as earlier said, we have number 1, which is the A shape. This is two opposing candles, a buy and a sell candle. So it's a buy and a sell candle. So this is a buy and a sell candle for a bearish scenario. So automatically this becomes what? Our A shape. So why is it A shape? It is A shape because we are going to draw the closing price. All right, we're going to draw the closing price, and if you look at the line chart, you see exactly what we see here. This is exactly what we are seeing on the line chart. So here we have another A-shape levels. Okay, so let's continue. This is a chart example. So your assignment will be, this is your assignment, and please, I want everyone, once you watch the video, that's if you are going to rewatch it, once you watch the video, make sure you send your assignment to the group chat. Send your assignment to the group chat. And what's your assignment? Mark out A shape for 1 full week. 1 full week. Mark A shape for 1 full week. All right, so as you can see, this is A shape key level, A shape, 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 A shape. Right, so we have the A shape key level right there. This is very important. And who can tell me why this is called an A-shaped key level? Please give me 2 minutes. All right, guys, I'm back. Sorry about that. It's really over. Can you hear me? All right, thank you. So what was your question? Okay, you said come again, please.
The time frame we are expected.
Okay, use 4 hours time frame. Use 4 hours or daily. Use 4 hours or daily time frame. The more you mark, the better you will know it. All right. So I hope you guys can see hear me because it's raining over here. Okay, so these are A shape. So let's go. So the same thing that we saw here is the same thing. This is the same chart, but this is the line chart version. All right, A shape. You can see them. A shape, right? A shape, A shape, A shape, A shape, A shape. So you can actually go to your line chart and draw them. Okay, just for you to understand them. All right. So let's yes, please. Yes, this is A shape. A shape. See it. See it here. This is what uh-huh. This is what A shape looks like, right? It's clear. It's not something that is difficult. See it here. A shape. Yes, it's on the group, please. It's on the group. All right, guys, please let's proceed. Okay. If you missed the previous class, we always suffice for that. All right, so A shape is the same thing as V shape, but V shape is the bullish version of A shape. All right, so you can see this is the closing price. So if you are drawing your levels, you draw the closing price. This is the closing price. All right, and this is the line chart version. We have V shape right there. V shape. Do you understand? So V shape comprises of two opposing candles, a sell and a buy candle. So we have this, a sell and a buy candle, a sell and a buy candle. So this is our V shape level. Do you understand? So for classic SNR, for the V shape, we have a sell and a buy candle. I repeat. And if you want to mark the candles, you mark the closing price. That is the bearish candle. So for a bullish classic SNR, which is a V shape, you mark the bearish candle, which is the closing price. I hope that's clear enough. Then if we go, as you can see, this is the same thing. 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 V shape. V shape. V shape on line chart, right? So the chart I showed you above, this chart above, this one. Ouch. This chart is the same thing as this chart. Okay? So V shape, V shape, V shape, V shape, V shape, V shape, V shape. All right. Okay, so this is the third key level of the classic SNR. We have the two candles on the same direction, buy and buy, or sell and sell. Two candles on the same direction, sell, or buy and buy. The difference between the closing price and the opening price is the gap. So that's where we mark as our key level. This is where we mark as our key level. I hope it is clear. Is it clear? All right, so let's move on. All right, so let's move on. Now, it is getting more interesting. Fresh and unfresh levels. Levels are fresh until touched by wick. So every level is fresh. So this level is fresh until price come and touch it by a wick. So what shape is this? A shape. It is what? It is fresh. F stands for fresh. See it here. F starts from fresh. US starts from unfresh. So we have this zone as what? A fresh zone. Fresh A shape key level. And we have this as what? A fresh B shape key level. Yes. Then this we have as fresh what? Open close. Yes. We have fresh open close. This is a bullish version, and this is a bearish version, and this is a bullish version. All right. Okay. So let's okay. So on fresh levels, for the unfresh levels, you can see, how do we know that it is now unfresh? It becomes unfresh immediately a wick touched it. So immediately this wick touched it, it has what? Become unfresh. So we are not interested in taking trade from this level again. Okay? We are not interested in taking trade on this level again. The same thing for the V-shaped key level. Immediately price wick it, all right, it has become what? It has become unfresh. Do you understand? So if price come in the future and tap here again, we are not interested in taking this level. How about the open close? The open close, this is the bearish, and price did what? Come, mitigated it. So we are not interested in this when a future price come, right? It means this might likely be violated. The same thing as this. We understand so far? All right. So, all right. So levels are fresh until touched by what? By a week. So it is a week that invalidates the freshness of that level. So pay attention. Any key level that has not been touched by a week is very fresh and can be used for looking for a trade setup. More on this subsequently. So when trading, you should be looking out for only fresh key levels because you will see more profitability with them. Yes, sometimes you might want to or be tempted to trade a level that have been tapped already, but most times it's going to fail. So to get the best out of it, you need to what? You need to use a very you need to use the very fresh key level. Is that clear? Is it clear so far? All right. So let's okay, I want you to take notes. Take notes of this. 1 minute. Okay. Sorry. All right. So take note. When a used SNR key level is traded again by the body of a candle, it becomes fresh again. But we can only use that same level just twice. So what this means is this: if we have a key level here, all right, assuming we have a key level here, and this key level have been tapped by this. I don't know if you can see this. Let's go back to this two. All right, and this key level have been tapped. Now what we are saying here is that if another body of the candle come and closes like this, this level becomes valid again. Do you understand? It becomes valid again. That's the meaning of that statement. Okay, so we'll get more of those examples subsequent. All right, fresh and unfresh levels. Levels are fresh until touched by a week. It becomes fresh again if closed by candle body. It's very important. So what kind of key level is this? What kind of key level is this? Exactly, A-shaped key level. Now take note, this was the candle that tapped into it. So this was the candle that used it, which means that this zone have been used. So if price comes in the future, we don't want to take this as our key level again. However, if price come in the future and closes above that level, it becomes fresh again. Do you understand? So we wrote here that this week already used the zone. So this week now makes this zone unfresh. But this body closed later made it fresh again. So price came, closed above it. I'm shouting because of the rain. I don't know. I'm just shouting unnecessarily. All right. So price closes above it. So automatically what happened? We're expecting that this zone becomes fresh again. So a zone becomes fresh again when it is closed by a body. I hope that's clear. All right. So this is a perfect example of fresh and unfresh key levels. All right. So let's go to the chart. So I want to ask now, what key level is this? What key level is this? Shape. Please, once you speak, just mute yourself so that because of your background. A-shape key level, right? Now, this is the fresh key level, A-shape key level. But take note, this was the first tap. First touch used the classic SNR. So which means that this touched have what used this A-shape key level. So this level have been used. In the future, when price come, we are not interested in selling from here. We are not interested in selling from this key level again. Why? Because it is now what? Unfresh. Okay? The same example here. A-shape, fresh level. This was the first use. So first use, it becomes what? Unfresh. You know, it kind of played out here, but we're not interested in this. Okay? We're not interested. The same thing, we had A-shape here. What happened? This one used it. Push price down. You understand? But take note of this. This was the candle that closed what? Above this key level. So immediately this candle closed above this key level, this becomes what? A valid zone. So automatically this becomes resistance turn support. Resistance turn support. So that's what they call ROBS, resistance break support. So this was a resistance level broken, so it becomes support. You understand? I say that again. We had a resistance here, A shape, used, price close above it. So there was now a break. So this resistance, immediately price close above it turns support level. So that's what they call ROBS. Is it clear? So the same thing for V shape. This is a V shape, price tap this, so this becomes unfresh. So we're not interested in that anymore. E shape, tapped it, becomes unfresh. All right. So if price come in the future, we don't want to take trade from that zone. You understand? So we had a rejection right there, and the rest. Do you understand? All right. So let's proceed to the final part.